Hi, do you want to learn a simple trading trick using technical analysis of the most basic kind, which is not rocket science, to separate yourself from run-of-the-mill mediocre entry-level traders and become a highly profitable, highly proficient, highly super efficient trader? If yes, please continue to watch this video. In this very short and sweet video, I'm going to teach you how trend lines drawn a little more differently than what you thought earlier can actually make a lot of difference to your trading regimen. Friends, I'm Vijay Bhambwani, a professional trader with 35 years of trading experience. I've been trading these markets since 1986, and I'm a founder, promoter and CEO of a limited company since the last 28 years, which specializes only in trading, especially day trading for a living. So when I'm going to tell you something, it's with sheer self-experience, and I don't have any courses, any financial products and services to sell to you. These videos are made without any expectation or commitment from your side. Let's dive right in, and I'm going to teach you how to have trend lines being handled a little more differently. Up front, let me tell you that this is not my original idea. It's something that I learned from an excellent book written by Constance Brown. And in this book, Constance Brown writes that trend lines can basically tell you a lot, even though they have been drawn in the past, which is the reason why she says that you should never ever delete old trend lines from your charts. Wherever properly drawn trend lines converge, many a times, unexpectedly and not showing up on your regular Dow theory or candlestick charts, the market witnesses a turning point. You see, market prices, just like apparel and dressing code fashions, do come back from time to time. Why do trend lines have memories? Because on those supports and resistances, traders have made and lost money. Many a time, a guy who started out as a short-term trader winds up becoming a long-term investor and is waiting and biding his time so as to get out at the right price. Somewhere in the future, where the trend line has met, he will basically get his no profit, no loss, which is called break-even price, and attempt to exit. Now, chances are on those charts, had you not drawn these trend lines or had you deleted these trend lines once they have been overcome, you would have missed out this move. Friends, drawing a trend line is the simplest thing that a technical analyst learns, and I'm going to show you in these two charts of Bajaj Auto and Axis Bank how drawing the trend line and treating them a little more differently can actually make a lot of difference. So let's go right ahead. Coming up on your screen is the first chart of Bajaj Auto. It's a daily spot chart. All right. The upper trend line which I have drawn starts from 19th of August 2020 and it terminates on 3rd of December 2020. It's not something that has happened 10 years ago. I'm telling you something which has happened a fortnight ago. The lower trend line, on the other hand, starts from 2nd of November 2020 and it connects with the upper trend line on 3rd of December 2020. Let's ignore the candles that are logged after the trend lines, because by the time you had drawn these trend lines connecting the highs and the lows, you had no idea as to what future candles would form like. So we basically are going to focus on the candles that are formed till the time the trend line was drawn and therefore extended into the past. You right click on a trend line and with your mouse choose extend into the future. and you'll basically see the trend line going forward in the right hand side. So after connecting 2 or 3 support points, when you extend the trend line to the right, they will at some point in time, if they are converging, touch each other. These are reversal points which have a very high probability that I'm telling you to spot. Now, you didn't know at this point in time that the trend lines would connect at some point in time in the future, which happens to be 3rd of December 2020, when you extended these two trend lines into the future. At that point in time, notice how the candle points and looks like a bullish breakout on 26th of November 2020. When the green color candle jumped up after a red candle on 26th November, you would be on an otherwise rational looking chart, a plain chart without these trend lines, be sucked into buying. You would go long. However, just ahead lies convergence of these trend lines, and you would have basically projected them by right clicking like I said and get the shock of your life. Bajaj Auto unexpectedly ran into a wall of resistance, not coincidentally, on 3rd of December 2020, where these two trend lines converged. The market very simply turned turtle on a dime without any warning and basically took the traders unaware. Like the old saying goes, successful people do not do different things. They merely do the same thing a little differently. So we are basically using this simple old trend line in a very different manner. Now look at the chart of Axis Bank. This is again a daily chart and in the spot segment. I've drawn two trend lines on this chart. The top one is from 18th of November 2020. It terminates on 22nd of December 2020. It's even more recent. The lower one is from 25th of September 2020, connecting all the way up to 22nd December 2020. And here the lower trend line basically connects with the upper trend line. A few of you might object to why the lower trend line does not include 1 or 2 bars which are below that trend line. Do note, if you go to Wikipedia, Investopedia, or if you go to any website which teaches you basic rudimentary technical analysis, you will basically read that a valid trend line is a one which connects as many support or resistance points as far as possible. If in the bargain you're leaving out 1 or 2 odd bars or candles which are beyond the trend line, that's fine, but you should catch as many times the trend line has been supported. Now here I'm overlooking 1 bar which is definitely the body is beyond that trend line. Now I've connected 3 other candles by missing out on this one particular candle, so I think this trend line which I have drawn is a lot more relevant. Note how the stock price of Axis Bank fell and basically bottomed out on 22nd of December 2020. Once the price started falling, if you were looking at basic vanilla Dow or candlestick charts without this trend line, you would have been sucked into short selling the stock thinking that is about to tank. But where the two trend lines met, Axis Bank actually bottomed out without any warning and started jumping higher. The fact that the two trend lines touched on this day warned of a probable bottom formation on this day. Remember, you would have projected these trend lines forward after having connected the dots, and you could know somewhat in advance that something was likely on this day on 22nd of December 2020. Where other traders would have gone short and lost their shirts, you would have resisted the temptation to short and thereby saved your money. You would have lived to fight another day. Now, I'm sure a couple of you would have some questions about this trading system, and it's backed by Connie Brown, and I trust Connie explicitly. Now, a few of you might want to ask questions whether this system works on charts of all time frames, daily, weekly, monthly, hourly, 5 minutes, 10 minutes. The answer is a resounding yes. It works on all charts. Does it work on all asset classes? Does it work on commodities, currencies, equities, bonds, derivatives? Yes, it works on all types. Now, here is another important question. Is it a standalone system by itself? Is it okay to use only this system and depend on nothing else? Hey, I don't suggest you do that. For a simple reason that we human beings like confluence. By confluence, I mean convergence of various weight of evidence or suggestive proofs. Imagine if you had to go out for a cataract surgery or a heart surgery or any other medical procedure. Would you just go to one doctor and when the doctor tells you you need surgery, put yourself under the knife? I'm sure you would want a second, if not a third opinion. So by all means, deploy moving averages, deploy some oscillator, check the price versus the volume and open interest correlation, and get weight of evidence from some other study as well. I think this small hack of projecting trend lines into the future and not deleting them in the future, even though the trend line might look irrelevant to you, is a very, very critical aspect of technical analysis. I'm going to be recording a lot more videos for you, and I want you to tell me in the comment section what you thought of this video. Please subscribe to my YouTube channel if you liked what you saw, and click on the bell icon to receive instant alerts. Also, share this video with your family and friends if you think it's going to make you a better trader, which I'm sure it will. I back up this theory myself. Also coming up on your screen are my contact coordinates, wherein I've listed out my social media account addresses. I would love it if you connect with me. We can get conversations going. I put up a lot of statistical reports in the evening post-market, which I'm sure will help you become better traders, and we can basically chat up with ideas about the markets. Friends, have a very, very profitable day. Vijay Bhambwani signing off for now. Have a great day ahead. Thank you for watching me. Wait till my next video. Bye-bye.